Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is mid-August. The market was down. The market's trying to hover onto this upper range. Some traders are frustrated. Some people are trying to buy strength or short weakness and overtrade, and that's not what you should be doing in August over the summer. We've had a very, very tradable move. Earnings season was very actionable. Market was up 5%. We're up 19% for 2013. And here I see traders frustrated, banging their heads against the wall because they're trying to be too active during mid-August when most people start to go on vacation and enjoy themselves. Look what we're doing. Here at T3, we're having a little softball game. You know what? We try and want to enjoy ourselves. You guys in the virtual trade floor, you heard Sperlin talking. We're going to have a team. You know, I'm not much of a softball player. I like to run, triathlons and do the Ironman, and I like to run miles and miles and swim through shark-infested waters. This is, to me, it's a little boring, or play D-line for a flag football league. But anyway, you know what? I'm going to play and be nice and be involved with the firm. Well, anyway, with that said, we're in one of these times where it does feel like we could correct a little bit more. I've had 3 of these intermediate calls besides the 2013 thesis where I talked about where we can go, what stocks that I like, and then trading different sectors at different times with different patterns. And at this one, it does somewhat feel now that we're going to test the gap from July 11th. Let's just go to the chart of the SPX or the spiders. Okay, right here is the SPX. If you look at this chart, you will see that we have a low here in November. It's trending all the way up and not even a worry. We tested it once. This was the accelerated trend. This was the trend that it got ignited to start the year right here, okay? And then, this is when we traded over 1474. Anyway, this was your little correction. From there, regrouped, bounced, digested, and resumed. So now the question is, what do we do here? We have a channel. We have a summer channel. We have a channel that's been now underway of being built for quite some time now. So let's take a closer look at this channel. It started to be put in place right around July. So here we are almost 6 weeks later. Some would say, okay, and I could see why, that we do have the potential making of a head and shoulders top formation. Okay, and the right shoulder is now almost built. Okay, I don't know exactly how much time it needs, and this type of pattern only triggers when you get a close below the neckline. And if that were to happen, you do have 1709, so say 1680, 30 handles, 30 for handles from here or so, gives you a move to about the 50-day, which would then almost give you a retest of this broken, this area. And that, I think that would be nice. I think a lot of even bullish traders like myself would love to see that. So in order for that to happen, we have to get a close below 1682. Then you also have a few different points of reference going across right around 1670. And at this point, it hasn't happened yet. So if you're cheating a little bit, it's okay. But don't be cheating with too much size. I'm not short overnight, because it just feels that way. The reason why it feels that way is because of a few different things. First of all, you look at the home builders, XHB. They, started already to break lower. It's now under all its moving averages. You have, a series of lower highs below the moving averages. It broke support, closed near the lows, and it does look like it's going to hit the 200-day. But this has been kind of going on for a while. But, it's getting a little faulty here. Okay, then you have the transports. It too had a breakout failure, dribbling lower, and, it sort of feels as if, it's going to head down to at least this level, which would be the retest, okay, beforehand, then that I'm talking about with the spiders. Then, on the other side of the fence, you have some, bullish action still in the financials, but they're really not getting any traction. They tried to be strong today. It's trying to hold this prior high breakout. It too feels as if, we could get a move down to the 50-day, but we shall see. And I'm not going to go through all of it, but then, and you also have some of the high beta names. Not really broken, but just kind of out of play. And I think everyone's been lulled to sleep a little lately with Apple because we had a really nice trade there since the earnings gap, which we'll get into. But you look at something like this with Google. I want to give you guys a quick little lesson here. I remember I was trading Google, okay? I don't even know, it was maybe a month ago, and it looked as if it was going to break above this mini flag pattern, okay? And what happened? Because I remember getting out really quickly. It broke above this pivot of 907, hit a high of 909, and closed on the lows through the range. That is what we call an outside day. This was an area to get out of your stock with a high-level stop or whatnot. It did not work. From there, it's just been dribbling lower. Google, I don't think I've traded it once since then because it's been out of play, lethargic, on its way down, and I guess we'll see how it handles, this area tomorrow. Same thing with Amazon. After that gap below or squeeze, it's been just dribbling. Dribble, 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 dribble. Okay? Here was that move that really, unfortunately, if you were short, you might have gotten squeezed out when it went above, this prior high. This was a pretty harsh move. And then from there, it's just been dribbling lower. If, you were playing for, a strength type area, you probably should have got away from it once it broke below this or even below this 295 instead of just, holding your breath and going underwater. At this point, it's going to hit the 50-day. Typically, really good stocks hold it the first time, so we'll see. But overall, Amazon, it does take time to regroup. Look at the last time I made new highs here. It took multiple months. That's why I'm not really in a rush. Okay, I haven't traded that also. It's been kind of off my radar on the C list for a while. Here is your 285. That might give me a, if it happens quickly, a spot to look for a trade. Tesla also, everyone's like, Red Dog, where do we buy Tesla? Where do we buy Tesla? I'm like, you know what? We have to continue to be patient. This upper range, whether it was barons, whether it was the downgrades, whatever, it was just a long way, since, the last time it had earnings here. It broke the earnings gap, so right there, that took the momentum out of the way. Then you put together 2 inside days and it broke below, and now it's coming into the 21-day. Okay, it has held the 21-day pretty much for 6 months. This one day after the Goldman Sachs downgrade, it broke it for a day and then reclaimed it with a Red Dog reversal. I did not buy the 21-day this day because it closed through it. So you had no idea. Next day you had a calculated buy, rallied, then you had a nice inside flag, rallied. So tomorrow we'll see, what type of trade we get here. We'll have today's low as a point of reference, which is 138, and then we have the 21 days, so we'll see what type of support it has. And at this point, if you're not stuck in this, which I don't think many people are, because it's been acting lethargic and weak, this will be an opportunity. And then if it doesn't hold and it happens to ignite down below it, then we'll know really the trade has changed. We've noted that the composure and the speed changed here. Now we got to see if this trend stays intact. We also saw some weakness in LinkedIn today. Not the end of the world weakness, but came back in with the market weak and the size of the move that it's had. Why do people want to sit around? Look how long this channel got maneuvered. Okay, it got maneuvered for a long time. Lots of micro trades along the way before going, and right now the market's not sure what it wants to do. So it's coming back into this little base area. Facebook, a few different things happened here. Okay, first of all, the morning had a really nice trade. Okay, just so you know, because I was talking to some of the people on my desk, if you bought it here after the earnings gap, okay, and you trailed it all the way up, you had a few decisions to make once it flagged right here. Okay, once it was flagging right here, because I was in it up here after trading it through here, after having the options into earnings, the whole 9 yards, and I said to myself, I'm going to trade Facebook to see if it can hold the 8-day and make a move up through 40, and if it can't, I'll start getting out of it if it breaks below 38 or 37.70. And look what happened 2 days ago. That happened. Okay, it broke. So you either had to get out of the way and say, I'll revisit it, or say, you know what, it's had a huge move, I'm a macro investor, I don't care, this thing could hit, the 21-day and still be strong over the long period, and I'm just going to sit. That wasn't for me. So anyway, with that said, today it tried a small Red Dog reversal, and I think that's where we all made some decent money in the first 30 minutes, but then it ran out of gas. So if we go to the 5-minute chart, you will see it broke below, right? This was just say the low on the open, quickly reclaimed it, went positive, and gave a move to 37.40, 37.70, and kind of filled this gap that actually we were talking about. My target was just to bounce to 37.40, not back to the highs, go through the roof. It was just a trade, and since I got out of it, I had the luxury of it. And then if you did it for a trade, and all of a sudden you saw this pattern start to come into place with lower highs, and then once it broke 37.20, that could have been your out right there. You said, okay, my trailer is off. You could have bought it here, added there, even stayed into that, met the target, sell some, hold some, and then out and live to fight another day. At this particular point, it does look like it still could work its way lower. So, why not be more flexible there considering the size of the move? And I still, think the highs of the year are not in. I still love this cup and handle pattern, and it all depends on how you're approaching it, what kind of trader you are. There's your cup. Here's your descending channel that you could have been buying through that earnings news, and then even the morning after right here. And now it's just going to need some time. It might even work its way back down to retest this support. And why not? Okay, it's come a long way. We got to see what happens with the market. But anyway, with that said, you have to really focus on what time you want to allocate to the market in order to approach it. Macro investors, I don't think you have anything to worry about. You see Faber on TV calling for an 87 style correction. I don't think so. But if you lighten up a little bit and you're not in, tier 2 or 3 in your macro positions, that's fine. If you're also trading like me where you're net short right now because the composure is showing you that, then, I don't think a crash is going to happen. But if it does and I'm short, I'll make money from it. Okay? Or if we have a nice pull-in, great. But I also, in my best opinion, don't think the highs of the year are in. It's just a matter of where we pull into in the next 2, 4, 6 weeks. We'll see. Recently, Apple's been very rewarding for us. We had no idea that Carl Icahn and even what's-his-face, Cooperman, were going to come in. All I knew was that this stock started acting better. Okay, a few different patterns here just to learn. First things first was this one. Okay, remember this double bottom here? I would think I was on my way to the Hamptons. Everyone's like, oh, Red Dog reversal, double bottom, boom. Happened. Then you could have even bought this day, and then flagged, showed commitment. Okay, then really, when I got very interested in, I wanted to see what would happen after earnings. Okay, would we see a gap, and would we see it protected? And then could we get some follow through? So let's just show you right here a little closer. This was your gap up. Get in some. Okay, you could have even waited for this day and then add to it when it broke this trend line. I think I even sold some into this. So into this, I didn't trade it for like a week, and then once it came out with the invitation, I'm like, you know what? I'm getting in there. Okay, got in there that day, held it, had it overnight, and then yesterday I said if it claims, or gets back above the 200-day, which I don't know why it's not in here. I'll put it in here. Moving averages, 200-day. There you go. That's very healthy, and there it is. There's your trusty 200-day. Was above it before the Icahn news came out. So if you were in it for technical reasons, which is usually why we are, because we don't know anything about what other people are doing typically, you made some good money. And then even today, so I took it home again, had a nice gap up, get out of it, and then he even had another little trade there. Let me just show you why on the 8-minute there was a nice little setup there. Let's go to or the 3-minute. Okay, here was your push. Okay, this is when you could have sold into it, and I think I pretty much got out of it around 497-ish or something, and then it started to get tight again. So I'm like, let me try and get one more trade, and this is when the Cooperman news came out. Bought some. Sold some into like this little push, knowing that the gap got filled up to 504, and said, I'm done with this for now. So now it's not on the A list anymore. Okay, let's see what it does here. Let's see if it consolidates within this doji candle or starts going above this. You could buy it, starts going below this. Maybe you shorted for a little bit of a retracement. But overall, very, very healthy move. It was a welcome sign for all of us that know Apple very well. And that's what's good about the job is you can get to know a stock very well, know the speed, know the composure, and figure out when things change, figure out when things are strong, know when things are weak. So you know how to tier in and tier out, know when something's in play and when something shouldn't be. And that's how you can make cash flow every day and then know when if the time is right, you tee up to the plate a little bit, in this thesis of softball, and hit the ball for a double or triple to let it add up to your batting average of a lot of singles and some stolen bases. With that said, gold. Gold is acting better. If you guys remember, the blood on the street lows right here, that was a really nice entry for some of you. And the swing trader maybe held it. Then it's been trending higher again. So now here you are with this 130 in front of you. Nice potent day today. I'm back in gold. Hopefully we got a little follow through. If you guys remember silver, that was what I went with way back here. And I mentioned that 1775 or 18.25 would probably be a better buy than a sell. That was right here. And then we updated it for a potential gap situation. Not only did it fill the gap, it's above the gap, and that's a nice move, showing you that there is pricing and timing even in weak trends, because look at the weakness in this trend. Okay, and you could have been out of the way. Once it changed here, you know, nice percentage gains for those that target action. And this was very targeted and tradable. So, lastly, again, in mid-August, what do you want to be doing? Do you want to be knocking your head against the wall, pushing keys, trying to overdo it, or do you want to be relaxing, getting ready for what could be a very busy fall? We just had a very busy earnings season. I think a lot of people did pretty well. You know, the market was up 5%. Then you were on top of being up 18, 19% for the year. So why not let the market consolidate, drift lower, make a little bit of money only in your A plays or maybe B plus plays, and enjoy yourself. You know, go to the beach, go to the mountains, be with your wife, be with your girlfriend, hang out with your kids, do things that make you happy, okay? Because the summer's going to be gone, and it's going to be the fall, and you'll be like, well, where did it go? So if you're not happy with where you're at and you're frustrated, just, you know what, take a few days. If you are happy and you just had a really nice run, don't expect to continue it, okay, or double or triple it up because you feel so great right now, because you're going to lose some of it. Don't let your highs get too high, your lows get too low. Be even keel, and you can make this into a career. Scott Redler, T3 Live, the recap. See you tomorrow with Brittany.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.